Welcome back to Good Seed Investing. In today's video, we're going to talk about the two main approaches to analyzing a stock: fundamental analysis and technical analysis. Fundamental analysis involves evaluating a company's financial health and business model to determine its intrinsic value. This means looking at things like earnings, revenue, debt, and management. The goal is to determine whether a company is undervalued or overvalued based on its financial performance. Technical analysis, on the other hand, involves studying a company's past price and volume data to try and predict future price movements. Technical analysts use tools like charts and trend lines to identify patterns that may indicate buying or selling opportunities. So which approach is better? Well, it really depends on your investment style and financial goals. Some investors prefer the more hands-off approach of fundamental analysis, while others enjoy the more active approach of technical analysis. It's important to note that both approaches have their own limitations and can produce conflicting results. That's why many investors choose to use a combination of both approaches to make more informed investment decisions. Let's dive a little deeper into each approach. As I mentioned, fundamental analysis involves evaluating a company's financial health and business model to determine its intrinsic value. Remember, the goal is to determine whether a company is undervalued or overvalued based on its financial performance. Here are some key things that a fundamental analysis trader might look at. Number 1, earnings. Traders may look at a company's earnings per share, revenue, and other financial metrics to assess its performance and potential for growth. Number 2, management. Traders may assess the quality of a company's management team and their track record of success. Number 3, financial health. Traders may examine a company's balance sheet, debt levels, and other financial indicators to determine its financial health. Number 4, industry trends. Traders may analyze trends in the industry in which a company operates, including changes in demand, competition, and regulatory environment. And number 5, economic conditions. Traders may take into account macroeconomic factors like GDP growth, inflation, and interest rates to assess the state of the economy as a whole and how it might affect a specific asset. Technical analysis, on the other hand, is all about reading a chart and understanding price movements. Some things that technical analysis traders might look at include: number 1, price charts. Traders may use price charts to identify patterns and trends that can indicate buying or selling opportunities. Number 2, indicators. Traders may use various technical indicators such as moving averages, relative strength index or RSI, and Bollinger Bands to help identify trends and potential entry and exit points. Number 3, volume. Traders may analyze trading volume to confirm trends or to identify potential trend reversals. Number 4, support and resistance levels. Traders may identify key price levels at which a security's price may experience support, a tendency to rise, or resistance, a tendency to fall. Number 5, chart patterns. Traders may look for specific chart patterns, such as head and shoulders or double tops, that can indicate buying or selling opportunities. Number 6, gap analysis. Traders may analyze gaps in a stock's price chart, which occur when the price jumps from one level to another without trading in between, to identify potential buying or selling opportunities. Some investors will use a combination of both methods, and here's why. Let's say you've done your fundamental analysis and determined that company X is undervalued based on its financial performance and business model. However, when you look at the technical chart, you see that the stock is in a downtrend and has formed a series of lower highs and lower lows. This could be a red flag and cause you to reassess your investment decision. It's good to know how to evaluate a stock in both approaches so that you can make the most informed decisions on when to buy or sell. So there you have it, a more in-depth look at the difference between fundamental analysis and technical analysis. Remember, the best approach for you will depend on your individual investment style and goals. I personally am a technical trader, so stay tuned for future videos going into more detail on how to read a chart and terminology like support and resistance that we discussed today. Thank you always for watching. Drop a comment to let me know what method resonates with you, and I will see you in the next video.